Okay, so guys, let's welcome to today's class. We have Nidhi Sharma, we have Vikram, we have Rajalakshmi ji, and we have a new candidate by the name of Mr. Paranirtharan. He works in SBI as well. So some of the other candidates could not join, including Vineet, Hansa, and few others. So just a quick short introduction. Nidhi ji, please go ahead.
Hi everyone, my name is Nidhi. I am based in Canada and my profile is anti-bribery, anti-corruption compliance. And I'm looking to kind of dwell into the financial crime world, and that's why the certification. This will be my second attempt to the certification. Thank you.
Thank you so much, Nidhi. Yes, Vikram, go ahead, please.
Hi everyone, my name is Vikram and I'm currently working for a Japanese firm in the compliance domain. And basically, my profile is testing, compliance testing. It's a auditing kind of work where we check the first line of defense work. And I am based out of Bangalore, and this will be my first attempt.
Thank you, Vikram. Yeah, Mr. Paranitharan ji, please introduce yourself.
Hi everyone, I am Bharanidharan. I am working in State Bank of India. Currently, I am a chief manager. So I have given twice exams, but I failed by 6 marks and 9 marks. So this time I want to clear it.
Great. Yes, and we have Rajalakshmi ji as well. Please go ahead.
Good evening, Vivek. I guess most of you know me, and yes, I'm also here just to see if I'm able to crack the exam. That's all for me.
Sure. Thank you, and you will. So today I would just want to discuss a little more on the BASEL committee, the customer due diligence for banks. So again, if I may ask you why this customer due diligence is important and what aspects do we need to look into? Anyone? Just an overview would do. Yeah, Vikram.
So customer due diligence is required to check the background of the customers, to check if those are, involved in any of the illegal activities or something like that.
Okay. And how do you think BASEL committee or its guidance can be relevant when we talk about customer due diligence?
So BASEL committee's guidance has like a complete framework on customer acceptance, which includes customer as well as the beneficial owner identification, how the customer risk is verified and their risk is profiled. It also includes text on ongoing monitoring principles. How do we manage the information about the customers, which includes record keeping, updating the information on a timely basis. If it's a long-standing customer, we should be basically doing the due diligence on a periodic basis. Last but not the least, it also talks about reporting of any suspicious transactions as well as freezing the assets if any reasonable ground is kind of found.
Sure. And what relevance do you think this BASEL committee brings in? I mean, why is BASEL committee relevant? Banks, they can formulate their own due diligence policies, right? Why we have a special chapter subtopic on BASEL committee and its guidance related to customer due diligence? So basically, one thing is that BASEL committee is basically formed by the governors of central banks from various countries. In almost every country, we have a central bank, which is the main regulatory body in that country. So every regulatory body representing themselves in this BASEL committee also provides a platform wherein a lot of information can be exchanged. So if we are to handle this present challenge of cryptocurrency, where at present we do not have a global regulation. So which body can go ahead and advocate or initiate a series of dialogue, as to what approach the central bank should have? Because it is a major upcoming challenge, and at present, since there is no global regulation, so these banking sector regulators are finding it very hard how to curb or keep a check on the cryptocurrency transactions, right? So any new challenges uh, can be discussed in this forum. If any particular country is following any special practices, or if they have any particular learnings, they can share those through this committee as well. And basically it is a policy guiding committee, that we may say, because from time and time they come out with better recommendations, keeping in mind the present risks that are there in the industry, right? So the BASEL committee has one part that caters to the risk management. They are foreseeing what is happening in the banking industry, what is happening in the financial industry, and then they are coming up with various regulations. Just like we have BASEL 1, BASEL 2, BASEL 3, although that caters to the risk part, but still, BASEL being a committee which is represented by the governors of different central banks, so it is the most apt platform wherein different policy decisions can be discussed and a conclusion can be arrived at, right? And since global financial markets are integrated, it is very important that the heads of these governors, central banks, they can come at one place and then they can discuss as to what they foresee as upcoming challenges and how the BASEL committee can actually guide the entire global banking industry. So on the same lines, they have given these customer due diligence measures, right? So of course, you have to understand that as and when the payment mechanism or the instruments or the systems through which payments are being made, as and when they change or they are transformed or they develop, they are going to bring in new set of challenges for the banks. And since central banks in every country is interested to regulate their respective banking sector, they need to be ready with the solutions for the same. I have already given you the example of cryptocurrencies being one of them. So as of now, whatever customer due diligence measures countries have in place, they have been arrived at after getting policy clarity from BASEL committee or other financial institutions, wherein they advocate that proper KYC of the customer should be done. So initially, this KYC was limited to identifying the person who was opening the account. Subsequently, it changed to identifying the beneficial owner as to which person or entity is actually controlling that account. Because as and when any terrorist activity happens, which poses a major challenge for the law enforcement agents or for the government, that is when the value of this KYC comes into picture. So they have advocated it to the banks, to the financial institutions, to have robust KYC practices. There shouldn't be any lacuna on the part of banks when it comes to KYC. So there should be thorough due diligence. Now, we know that at present there are some shortcomings in this process of customer due diligence itself when we talk of correspondent banking or respondent banking, wherein we said that many a times the bank does not know as to what kind of customers are using its services, especially if it is providing correspondent banking services, right? So that is one part wherein banks need to improve their risk management practices. Got it? This is just to give you a little overview as to why this BASEL committee is important and why whatever guidance it gives, it becomes relevant. Clear? Now, we know that in banks, the ultimate onus of complying with such regulations rests with the compliance officers. So these guidance that have been given by the BASEL Committee on Customer Due Diligence for banks, they become particularly important for the compliance officers, right? Because otherwise, a compliant officer may not know as to what is to be done. Now, let's suppose there is a bank and the bank may have their internal policies. But we must understand that the bank may be working in a particular geography. It may be working in a particular country. Now, let's say it is State Bank of India. Now, SBI may be very well versed with the Indian regulations here. But what if it is operating in France, in Great Britain, or USA? So in such a scenario, the bank should be aware as to what requirements are there, as per the regulator in those respective countries. So such onus would rest with the compliance officers in particular to comply with the guidelines. Okay, I said the main focus of this has been on know your customer. And on this, we have already discussed that the idea is that every bank or financial institution will have a customer acceptance policy, what we call as CAP. So this is equally relevant for financial institutions as well, that the KYC policy of the respective institution will have 4 pillars. So the first pillar is customer acceptance policy. The entity, the institution, the bank has to clearly mention on its policy as to what all kind of customers will be accepted by the bank as its customers. So this is customer acceptance policy. The second pillar is customer identification process, as to how you're going to identify the customer. And then there is risk profiling. Depending on the nature of risk the customer brings, we will grade the particular account in particular category. And then there has to be a regular monitoring of transactions. This is to check whether the transactions are in sync, are in line with the risk profile of the customer. Got it? Now, the new thing that has come is the use of technology. Now, these days, IT is being majorly used by most banks to track the transactions, and basically your data analytics or business analytics. This goes a long way. Banks have transaction monitoring systems in place. So if the transaction in an account is not as per the profile of that customer, the transaction monitoring report may come out with a alarm or a red flag. So these are there to help the compliance officer or the respective officer to make a thorough analysis of that particular alarm, of that particular red flag. Is it clear? Any questions as of now? Please let me know.
No.
Another important thing to remember from the point of view of the ACFCS exam is that whatever customer due diligence we have to do on a particular account, that due diligence is directly proportionate to the customer risk. Okay. So if you expect a particular customer to be more risky, you are going to employ higher customer due diligence measures, more intensive, what we also call as enhanced customer due diligence, right? So this will depend on the kind of customer you have, the kind of account he maintains, the kind of business he does, maybe the jurisdiction that he's coming from. Clear?
Yeah.
Guys, any question as of now, please let me know.
No.
Paranitharan, please. Any question?
Yeah, no question, sir.
I hope you are able to understand whatever is being shared.
Yeah.
Okay. Now, another thing when we talk about customer due diligence is that the BASEL committee also recommends that whenever the customer is going to make the first payment, we would ideally want it to be transferred from another bank wherein the person is maintaining his or her account. So if Vikram wants to set up a new account with me, I would preferably want Vikram to transfer money from some other bank account, which he's already maintaining with some other bank. So it's like Vikram transferring money from his bank account in some other bank to the new account that is being followed. Got it?
Yeah.
This is to basically strengthen the customer due diligence measure, because now you are not only relying on your CDD, customer due diligence, but also that since this customer is already maintaining account with some other bank, right? So you would want the first transaction to be routed through that bank account. Is it clear?
Yes.
And BASEL committee recommends that these customer due diligence principles, these should also be developed by non-bank financial institutions and other mediators like lawyers and your accountants, attorneys. Clear?
Yep. Right.
Okay, so the main focus of BASEL committee is on basically you want to identify the risks so that necessary monitoring can be done on those particular accounts, right? And the major risks are your terrorist financing, money laundering, maybe dealing in dual item goods, or especially if entities are, I mean, if you're dealing with an entity that is placed in the United Nations Security Council sanctions list, so this CDD becomes more useful, more important when you're dealing with such customers, because a body like UNSC has already prohibited from to banks or financial institutions to deal with those particular individuals, companies, entities, right? So how will you find whether they are one of them or not? Only if you do proper customer due diligence, yes or no?
Yes.
Now, additionally, let's say the person's name very much resembles to that who is on that sanctions list. Okay, it is not 100% match, but still it is a match. Now, you may want to place such a customer under the monitoring list just to monitor the transactions. This will depend on the compliance officer, the risk appetite, the risk philosophy of that financial institution as to how seriously they want to implement it. Why? Because this requires expense of a lot of resources. Okay. And since banks, financial institutions, these are profit-making entities, many a times they are reluctant or not very forthcoming when it comes to implementing new measures to improve customer due diligence or monitoring. Okay, so they would not invest much on this. Is it clear?
Yeah.
So that is why the approach followed by the law enforcement agents, by the courts, becomes very important. If the regulatory body will levy a penal action penalty on a particular bank or a financial institution, then they are going to take it more seriously. That means they're going to implement these guidelines more vigorously, more rigorously. I hope this is clear now.
Yes.
Yes.
Right? And again, let's remember that the customer due diligence guidelines may vary from country to country, from jurisdiction to jurisdiction. Any jurisdiction that has lax a taxation system, that means which promotes investment, which may fall under the category of tax havens, they may have a system wherein the customer due diligence guidelines are very weak. Okay. And that is when the money launderers, fraudsters, financial criminals, they actually make most of these financial institutions or such tax havens countries, because the compliance culture is weak. There are very flexibilities available. So whenever we are dealing with such a jurisdiction, we have to be more aware, because that particular jurisdiction is going to bring in greater risk. Right? Now, similarly, this chapter also deals with European Union directives on money laundering. So again, you know what European Union is. So basically, United States, your United Nations Security Council, European Union, and some other countries like Canada, maybe Australia, they at times come out with their directives. And since they form a major part of the global financial system, many banks, many financial institutions rely on the regulations given by these countries for the survival or growth of their business. So these have to be taken very seriously, right? Like if you do not follow the European Union directives, you won't be able to function within the European Union. Can you function?
No.
No.
Okay. So European Union being a group of, I think it is a group of 27 countries. So they have developed these directives that specify the legal and regulatory framework that the EU nations are required to implement as far as money laundering is concerned. So basically, these directives, they warrant, they make it mandatory, or they impose these conditions on the banks that these banks must comply with these directives given by the European Union. So what are these directives? These directives cover terrorist financing as well as money laundering. They also deal about detailed customer due diligence. So what European Union's directive says that when we are doing customer due diligence, so we should not limit our due diligence only to the identification and verification of the customer, but also to the establishment of the purpose as to what the person wants to do and how it wants to achieve it, right? In normal CDD, what we are doing, we are simply identifying and verifying the customer. But the European Union directives, they go a step ahead, and therein CDD also means that you have to also verify as to the purpose and the intended nature of the business relationship. Okay, so if you as a customer are going to come to me as a bank, as a financial institution to form any association, other than verifying your identity, I also need to understand as to why you want to open this account, what kind of business you are into. Got it? So it is like a broader understanding of the customer is to be done. Okay, CDD applies to both new and existing customers. So because it is an ongoing activity, so the risk that an existing customer brings can change with time. So that is why regular monitoring has to be done. It also directs that all the beneficial owners in an account should be identified and verified. Okay. Then it also talks about simplified due diligence. So basically, this is a new concept that has developed in some last years. Simplified due diligence. So basically, whenever the individual or business is a low risk, wherein you as a financial institution bank perceive the customer to be of low risk, you can actually simply use or employ simple due diligence, which is limited to identifying and verifying the borrower. Got it? Right. And enhanced due diligence may be required where you perceive any major risk that can be related to money laundering, that can be related to terrorist financing, that can be related to any other financial crime. So if you perceive an account or customer to bring a greater risk, you can do enhanced due diligence on that customer, on that business. So this would also include non-face-to-face business, politically exposed persons, right?
Yeah.
So the European Union directives also says that the countries, the member countries, they need to implement a strong system of corporate registries. So we have already discussed in our previous classes that whenever you are setting up a corporation, basically what we call as India, company here in India. So whenever you're incorporating any company or any business structure, there has to be a mechanism in place wherein all such information should be available at one place as to who has formed the company, with what capital have they formed that company, what is the name of that company, who are the directors or who are the trustees, what is the purpose of that company. So all that information should be readily available on what? On corporate registries. Corporate registry is just like a register, just like, we have a register wherein we give manual permission and we keep a record of it. These days, electronic registries are available. How many of you have gone through the website of Ministry of Corporate Affairs India, MC21?
I have gone through, sir.
I haven't.
Okay, Raji, if you can please go through. So is with Nidhi ji. So you will
we
see.
do it on a, for a day-to-day operations.
Yeah, absolutely. So in case you want to check on any information on a company, if you have the company's name or its company identification number, SIN number, or if you have the DIN number, director's identification number, right? So you can do search on it. And it is a common place. It is a center place which is going to provide you all that information. So it is a corporate registry. It will tell you who is the director, what is the name, what is the nature of business, when it was formed, what is the capital, are there any disputes, or are there any charge on their assets. So similarly, this is available in many other countries. So one of the directives of European Union is that the implementation of corporate registry should be strong. That yes, they need to have corporate registries in place, but at the same time, the implementation should also be strong. Okay. So in many countries, you will find that a company formation agent can form the company. So if Vikram and Nidhi ji wants to start a company, in one country, presence of both of them may be required in front of the registrar to set up a company. Whereas in some other country, in some other jurisdiction, their presence may not be required at all. And a third person, a company formation agent, may open the company on their behalf. Right? So you can see that a country where presence of both the directors was required, there I am going to get more authentic information on who the directors are. Yes or no? And a jurisdiction where the company was formed by a company formation agent, there I may not get the true information.
Yeah.
Okay. This is because the implementation of regulation is weak. This is the point that has to be remembered.
Yeah.
Okay. And fraudsters, financial criminals, they prefer such jurisdictions or such law systems. So if any jurisdiction that is weak on implementation of these global regulations, they have weak compliance culture, they are a major risk hotspots. So if you are going to get into a correspondent banking relationship with entities in such jurisdiction, you are going to take a major risk. So the question can be that, your company is planning to take over a particular company located in such a jurisdiction which has weak corporate registries or wherein the compliance culture is very weak. So the first thing should come to your mind is that here the level of risk is high. Yes or no?
Yes.
So now you've got to see how can you control that risk. So in order to control the risk, what is required? Identification of the risk is required. So whatever scenarios would be given, you will have to identify the risks first, right? And then how we can control them. Like if you remember in one of the CFCS questions, they say that once you have merged with another company, you've got to offer them training within next 6 months or within next 1 year.
Yeah.
You know that? So it is a control, right? At the same time, the scenario also said that the company, instead of doing their own due diligence, they relied on some third-party vendors, right? Who did not disclose the actual picture of the litigation, that company was actually involved in a litigation. So proper identification of risk is very important, because only once you've identified the risk, you can implement any controls. Yes or no?
Yes.
Yes.
right? So this is one of the directives of the European Union, that the corporate registry should be strong. When we say strong, basically accurate information should be captured. Okay, and intensive information should be captured as to who the directors are, who the beneficial owner is, whether there is any sleeping director.
Also, Vivek, I just wanted to give one example here.
Please.
We were talking about certain company for service providers, right? We recently came across a case. You can still Google it out. They're called AMP Consultants Limited in Hong Kong. So the URL, their URL says the ampHK.com.
AMP.
The AMP.
Yeah.
A is in America. M is
Yeah,
in
got that.
Yeah. So if you can even go through their website, the ampHK.com, they openly pontificate, they openly say that we are adept in creating companies in Hong Kong where your physical presence is not required. They also say we share our business address with you, in the sense, if you want to float a new company, you can use our address. That's another thing. And they go on to say that they have good relations with many banks there in Hong Kong. So setting up of an account is also very easy. And there in their services, they list many tax havens in which we operate, like Cayman Islands and all other things. So when I stumbled upon this was I encountered this case because because we were investigating certain transactions which were routed to some other company, and they had declared that these are their company secretaries. In the DNB report, opinion report. So when I opened it up and I just looked it up online, we were all stunned because they were openly declaring all those things, saying that we can do this, we can do that in Hong Kong. This is possible, viable, legal, and all those things. And they also, kind of tell you, like, it is like a tempting offer, like, even you can create a business here and start working here and all those things. So this is, whenever anybody gets time, please go through that website, the ampHK.com. You will get to see for yourself a real example of how these gatekeepers operate. Yeah.
And that's a great example. And to add to it, see, you've got to understand now, again, you refer to Hong Kong. Okay.
Yeah.
Now, whenever any scenario comes up, okay, what we need to understand it, we must know that whether Hong Kong is a tax haven. So actually, it does not directly fall into the category of a tax haven. Okay. But it is very close to being called as offshore business center.
It is, yes, it is offshore, as well as now the recent, I saw the news wherein they said, no, they are also helping Russia because of the sanctions there. They are, most of the chips that are being passed on to Russia because of the sanctions imposed on them, they are taking the route from Hong Kong. So Hong Kong is a major destination. I will also see if I get the news, I'll also put it up on WhatsApp also.
So what we need to learn from this scenario is, see, there is a jurisdiction. Okay, they are allowing. This is not possible without the local government's concurrence. Right. Okay.
Yes.
Because if government wants, they can, stop such companies from performing. They can stop their operations. Now, like Raji said, that they are openly sharing this to the world, that we provide these services. So what this says is, number one, that the compliance culture in Hong Kong to an extent is very flexible. Okay. Very accommodative. Okay, that also means that they are welcoming foreign investment. See, usually there are many investors who do not want much of compliance. Why? Because the problem with compliance is that you can be tracked. And the problem with tracking is that you will be taxed. Please understand this. Why people want to invest in tax havens, most of them, is because they want to save on tax. Tax evasion is their purpose. Tax evasion, which is illegal. Fine. Now, who can facilitate if you want to do something wrong? So if you want to be part of a global financial system, you've got to have access to bank accounts to banks. Yes or no?
Yeah.
So you choose any such jurisdiction, any such country, any such tax haven, which is very lackluster, very weak in implementing these. They openly say, we will protect your privacy.
Yeah.
So that is wherein such entities, mostly financial criminals, they will go ahead and, start investing their funds. Of course, at many times it is done by legal companies as well. Tax havens are used for legitimate business investments through shell companies, right? But for us who are students of financial crime, we must understand that this is very comfortable for a financial criminal, for a money launderer. This is what they basically want. They want minimal information to be taken at the time of account opening. If they can be guaranteed that their privacy will be protected, nothing like it. They don't mind giving some additional as service charges to such a bank or financial institution than to pay to the government as taxes. Because taxes anyways are very high. You'll always see them anywhere between the range of 20, 30, 35, 40%, right? Whereas this fee, this service fee can be negotiated on the entire amount. So it is like a financial criminal getting money from whatever illegal sources they may be. Ultimately, they want a bank account to park their funds, because further investments, movement of funds can only be made through the bank account, right? Because then you can access the global financial system. Please understand that, right? So that is why from day one, we have been putting a lot of stress that you must understand and pay careful attention to the jurisdiction that has been presented in the scenario.
Right.
Okay, that will always go a long way in helping you to answer the question. Okay, then the European Union directive also says that there should be a proper licensing registration system for currency exchange offices as well as trust and company formation. So it is just like if you want to set up any company, any trust, any society, there has to be a proper registration system. So what happens when we are registering? When we are registering, we have to provide information, our name, or who would actually control that entity, what is the purpose of that entity, what all it is going to do, from where it is going to get funds, right? So once you get that information, you are doing a good level of due diligence. And now you are going to have some information with you. So if tomorrow any fraud happens on that account or any illegal activity is observed on that account, you have some information wherein you can contact the customer too. Got it?
Yep.
Okay, then there are like the fifth directive says that the digital currency administrators and exchanges under institutions should be subject to AML regulations and reporting. So the broader picture is that for European Union, they have come out with their own set of directives on money laundering. The idea remains the same, that you should do proper due diligence, right? Due diligence is an ongoing process, so it has to be done both for new and existing customers. We should verify the beneficial owners as well. Plus, there should be strong corporate registries. There should be a proper licensing and registration systems for any entity that you want to set up, be it a trust or a company or a currency exchange office. Fine.
Yeah.
It also says that if there is any art dealer or professional who is providing similar services that to of an accountant, then they should also comply with the AML regulations. So what are AML regulations? Customer due diligence. In addition to this, if they find anything suspicious or if there is a lot of cash transaction involved, they may have to file cash transaction report or suspicious transaction report with their country's respective statutory bodies, law enforcement agencies. Clear?
Yeah.
Any doubt as of now? So this chapter 14, they have basically highlighted some of the important global institutions, groups, which are either giving some guidelines to protect the global financial system from various financial crimes. Okay. Or basically they are there to promote exchange of information amongst banks. Now, similarly, we have something called Wolfsburg Group. What is that?
It's like a private sector association of global financial institutions. I think it covers 11 institutes. They basically talk about standard setting organization for KYC, AML, and terrorist financing in the financial space, because they're all led by banks, people from various banks globally.
Raji?
Banks.
These are a group of banks, which are the private sector association of 11 banks, like, you have Deutsche and all those things, their HSBC and all. And they have given a set of principles for private banking. So, and and they are also revised time to time, and they serve as a guide for I guess mostly those banks which are a part of it. But we also, I mean, kind of can follow their standards. But those 11 banks essentially, which are members of that group, they are bound by, they are supposed to, use that as a reference circular for their operations.
Okay. Vikram, anything you'd like to add?
So it aims to develop the framework and guidance for managing the financial crime risk, particularly on the AML and the counter-terrorism financing side.
Fine. So now it has become an association of 12 global banks.
Yeah, 12.
Okay. Which aims to develop frameworks and guidance for the management of financial crime risks. See, this is what we discussed when we spoke about BASEL. Okay. And again, here you will find the same thing, because these banks are interdependent. Okay. Especially through something called correspondent banking. A particular bank may not be available in every country across the globe. Okay. Or a particular bank may be majorly located in a particular geography. So there is a lot of interdependence amongst these banks. And since the financial system is part of the global financial system, they are all under the one big umbrella. And since money is going to flow through these accounts, it can flow through any account. So basically, it is very important that you are on a common page. You have a common understanding as to how are we going to respond to these risks, right? Yes or no? So if we are the 12 global banks and we are catering to a huge geography, right? Now, if we have to share some information, there has to be a common reporting standard or no? There has to be a common framework, no?
Yes.
On the basis of which we'll be sharing the information. So this is what this group does. This basically aims to develop these frameworks and guidance for the management of financial crime risks. Now we all know what all comes under financial crime. Okay. Now financial crime basically brings with itself various risks. Why banks are scared of this risk? But if a financial crime happens,
the fines.
Yes, absolutely.
Reputation, fines.
The first is the fine, because these are private businesses. They are profit oriented. So, profit means a lot to them. If they are penalized by the regulatory body or the law enforcement agents, so they may have to pay a huge amount towards that. This is one. Number two, the heads of the bank may be put behind bars depending on the nature of the crime. Yes or no?
Yes.
And third is that they may be sanctioned. If the regulation or guideline or a statute of a particular country says, yeah, that if you fail to do this, we may, bar your entry into our market, or you'll not be given license, or your license will be quashed. Right? Now, if you don't comply with it, then the regulatory body may take such an action. So again, that is a risk.
Yes.
So these banks, they have come together under the name of Wolfsburg Group, wherein they develop these frameworks. Now, since the global financial system is very dynamic, I said the way payments happen is changing at a very rapid pace. So that also means that the risk is also changing. It is evolving all the time. Right? So again, this becomes a common think tank. Just like BASEL committee does, wherein it is represented by the governors of the central banks, right? So here the heads of these 12 global banks, they come together and then they decide to formulate a common framework. And basically that framework is around what? How do we identify the risks, the financial crime risks, and how do we manage them? Clear? Now, under this, what is most important is you will see that here is one of the questionnaires. Our correspondent banking due diligence and financial crime compliance questionnaire. Why this becomes important is because I said that correspondent banking brings with itself a lot of challenges, a lot of risks, right? And here, because you are relying on the other bank, you're relying on the compliance culture, compliance standard, compliance quality of the other bank. Yes or no? So before getting into a correspondent relationship with any other bank, you would want to ensure that you are following the common practices. Okay, so these correspondent banking due diligence questionnaire, these are modified, these are revised time to time. Okay, so like I said, if the group perceives that a new risk is emanating, or what happens is, all of a sudden they may see that a particular cartel, let's say a particular group involved in drug trafficking, becomes active, right? And they may see that a particular branches of their banks are getting exposed to this risk. Now they would want to limit it. They would not want it to escalate to the other part. Let's say if a crime they think is happening in Mexico, they would want it to be limited to Mexico. No, they would not want that to escalate it to some other territory where this bank may be having its branch. And this also entails responsibility on the respective bank, that you've got to ensure that you implement all the guidelines in true spirit so that risk can actually be addressed. Clear? Is it clear?
Is it clear? Yeah.
What about others?
Yes.
All good.
Others?
They also have like a repository, right?
Yes, absolutely. Okay, so you may also go through these resources that are available on their website just to get an understanding. Now, next time, let's say if I'm creating a scenario-based question, so I'll be preparing from these itself. Here you will get every now and then a very good case study, and then you can prepare a question around it. Right? Like this is new, Wolfsburg Group Payment Transparency Standard. This is something new and interesting. Right? This Wolfsburg Group responds to FATF consultation relating to non-profit organizations.
I think that's the question.
Yes. So you see, So this has to be addressed from the perspective of the legal entity and on behalf of all its branches.
Mm. Like basically from a corporate office perspective,
Yes.
which includes all the subsidiaries.
So basically, again, what you are doing, you are providing this information to the other member banks, right?
Yeah.
So whether the bank offers correspondent banking, please select yes or no. If yes, then you'll have to select this. Whether the correspondent banking services to domestic banks. So this is the framework that we were talking about. This is kind of framework, right? Can you see that this in itself is a framework? By the information that they are asking through this questionnaire is the framework, no? Otherwise, how would you know what all information is to be provided? So this questionnaire actually tells you that this all information has to be provided. Clear? Yes, please. Now, some of these terms may be important, like what is first line of defense, second line of defense, third line of defense. Because what if in the exam, they pose you this question which is around the CBDDQ, and then they may ask you what is second line of defense, and then they may have 2-3 options. Yeah, please let me know if there is any question as of now.
No question. This is the most like kind of the text heavy chapter. इसमें बहुत कुछ you have to kind of.
But from this you will hardly get 3 to 4 questions, not more than that. है ना? You will get questions around Wilsberg group for sure, and at least 2 questions on BASEL committee. Even in BASEL committee, basically they're going to ask the role of intermediary.
Right. That in that tips and tricks wala document
They have provided the
that.
link. Absolutely. So yeah, Rajiji, anything you'd like to add?
Well, both FAQs on intermediaries is the thing. BASEL committee, sound management of risk related to money laundering and financing of terrorism.
Yeah. Paranitharan, anything you'd like to add? Maybe share your experience regarding today's class.
Yeah, today so many things I learned. I have gone through this chapter, but in this to this detail I have not gone through. Great, very good learning experience.
Rajiji, would you want to endorse the view?
Yeah, absolutely.
Anything more you'd like to add?
I'm myself required to, I'm required to go through all these things because I'm, I'm not very thorough with all these concepts. So I'll have to go through them once more. And then if I've got something, I will definitely bring it back.
Her voice is very low.
Yeah, very low actually. Yeah. It is like she's speaking from a different room, huh?
Yeah,
Yes.
you're spot on. I'm speaking from a different room.
Vikram,
Hello.
what about you? Anything you'd like to add? How's your preparation going?
It's going, but not that at that pace. So slowly it's going. So some days I don't get time, and some days I manage to read something. Yeah.
Now for some next classes, we'll be just focusing on the content. We'll not be doing those questions for the time being, just to, get back to the flow. So we'll be discussing these things again.
Yeah, kind of a recap.
Yes, absolutely. Highlighting the important points, and see, like Raji shared the Hong Kong case study, So similarly, because otherwise, see, once after a certain time, reading can get a little boring.
Yeah.
So if you know the important points, then there is no harm in, reading. Like I shared this, the resources on the website of Wolfsburg Group. So you can, do small readings. That is going to help you for sure. Just understand that.
Very recently in Canada, the regulatory body FinTrack, they also fined one of the Canadian bank. I mean, they have presence in the US also, so that's why they get the double impact. They did not report suspicious transactions on a timely basis, and basically their AML program was not meeting the standard. So it's all in the news every day. There are so many jobs coming in TD Bank, but I think they're overwhelmed. I've applied on 1 or 2 jobs, but it's been 3 months. I think they are in the process of gathering candidates right now, and then one fine day they will start. But every day there is some or the other position that comes: audit, compliance, conduct risk. So much going on at TD Bank.
Okay.
The second largest bank in Canada.
See, one of the reasons why the law enforcement agents actually take this very strongly, if the banks are not filing proper CTR, STR, is because if they find that that is leading to tax evasion, okay, that is basically loss of revenue for the government. And no government wants that. Fine.
Yeah.
So that is why if they see that the reporting standards of a particular bank are not up to mark, or if they are deficient, that means they're not providing the relevant information, or if they're hiding something. So they take it very seriously, because ultimately this also leads or promotes tax evasion. Like the very purpose of these suspicious transaction reports is, or cash transaction reports is, because you want to get a true picture as to who are those customers or businesses or accounts where there is a lot of financial activity, but maybe they are not, filing their returns or depositing their taxes in the same ratio.
Yeah.
Right. And of course, we have different law enforcement agencies. There is an agency that looks after the taxes. Then there is an agency that looks after the national interest. When we say terrorist financing, so the risk of terrorist financing, the tax agencies are not much concerned with the terrorist financiers. But yes, a federal investigative agency or any agency that has been interested with the national security, they also fall under the definition of law enforcement agencies. They would view the account or the customer from a different perspective, right? Because their duty is to protect the nation or its assets against terrorist attacks. And we all know that in the previous terrorist attacks, the bank accounts, the banks have been misused. That is when this concept of KYC became a lot more important, and United Nations, they started and they directed banks to have strong KYC systems in place. Right. And I am also in the process to add more questions. So very soon that 75 will become 125. Right. Yeah.
Great.
If you guys have anything else to add, please let me know. Otherwise, we'll be resuming next week.
Nothing else from my side.
Okay, whenever you get time, my one piece of advice is that instead of reading the cyber security chapter word by word, you just take the important terms, okay, and read about it maybe from Google or any other source, so that you just know what it is. Like, what is a computer virus? What is a Trojan horse? What is a computer worm? Right?
Yeah.
So that at least you are aware with the terminologies. Like, what is a ransomware attack? What is a malware? Got it?
Yes.
Because in this scenario, they will create the scenario around the activity or the kind of cyber crime that has happened. So it is very important that we first understand the different cyber crimes.
Right.
Yeah. Okay, guys. Thank you so much. So we'll be meeting next week.
So much. Bye.
Yeah. Bye.
Thank you.
Take care. Yeah. Have a great evening.
Thank you. Bye.
Thank you.
Bye.